Okay, Recons video on Sunday, the 4th of September 2022. It's just gone 4:53 AM Chicago time. Do hope you are doing well. Hope you're having a good weekend. So, this is the weekend futures market recap video where I go through 15 of the largest futures markets. These are the ones that we're going to go through, and I show you what I'm seeing on my charts. Before getting to all of the different markets, I don't think there's a lot of interesting things going on. I think the most interesting chart at the moment, or charts at the moment, are to do with the E-mini. So let's talk about those for a little bit. I'm going to show you the 13,500 tip bar chart, which is roughly equivalent to like a 20-minute chart on the E-mini. And it's the highest time frame tip bar chart that I look at. This is the more traditional view of using the better indicators, where they're split on two screens. On the left hand side we have everything to do with volume, with better pro-am using the average trade size, and better momentum using the buying and selling volume. On the right hand side we've got everything to do with price, which is using better sine wave to calculate our cycles and trends. The simplified view looks more like this. We just kind of take the best of the three indicators and plot them on one chart and generate kind of signals when all three indicators are going off. But let's look at this chart in some detail. So I thought at the end of last week, when I put up the video on the 28th, that we would have some weakness into Monday. The amateurs would get wrong-footed, and maybe we would catch sometime Monday, Tuesday, and start to rally back and test the highs. Well, no, we did have some amateur activity at the beginning of Sunday, Monday, but it didn't catch. It didn't cause a reversal, and we kept on kind of lurching down. So this was the Friday Powell kind of speech, where we had a big sell-off, 100+ point move. It was marked by a Rambo pattern before that. There you see the highs of the market marked with an R. Rambo stands for potential reversal of an amateur breakout, R-A-M-B-O, and it often marks certainly some weakness from a high being made by the amateurs. Sometimes can cause a reversal in the market and marks the absolute kind of top, and it did a nice job of marking that top. So the Friday we kind of sell off, we generate exhaustion, sell, bullish divergence, and we try to catch here, but we don't trigger a change in trend at this point. We just kind of bounce off this trailing stop from better pro-am, and we keep on trading down. And it's not until Thursday into Friday's activity where we start to see an exhaustion pattern, kind of mirroring the exhaustion pattern that kind of gets the move going here, although the reading was pretty extreme at about 50,000 kind of down here on the E-mini. And then we get Rambo patterns right at the bottom here. So again, the same things. The amateurs getting wrong-footed, they're buying the breakout here. The market reverses, goes the other way, and at this point here they're selling it down. So they're going short at this point, and again getting wrong-footed because the market kind of bottoms, goes the other way, trips them out of their short trades at this point here. More Rambo patterns as we have a bit of a short covering rally. Doesn't generate an exhaustion pattern, but it's kind of tripping people out of their positions who have trailing stops, and then we reverse and go the other way. We had nice signals on the 1500 tip bar chart for that reversal on Friday, coming into 10:30, 11 AM with the close of the European session. I'll just show you that on the 1500 tip bar chart. There's that triple signal, 9:50, and then as soon as 11 AM kind of comes along, bang, when the Europeans stop trading, and it's all driven by the US. That's a window of opportunity for getting a reversal day, and it's a classic. Marks kind of the test of the highs, bang, we sell off after then. The triple signal here with the dotted line generated from all three indicators, non-correlated indicators going off. So we've got exhaustion by bearish divergence based on volume and momentum. We've got blue professional bars kind of selling those highs. We know that because the trailing stop behind the blue professional bars, this line here, gets triggered, and we kind of go short. And it's overbought with the background in red based on cycles and trends. We're overbought at this point. We test back up, we get these little signs of weakness, bang, 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 and then bang, this moves. And it was a really nice move. So I was long Thursday into Friday morning, then got short here, and then came out. I think I came out around here with the blue professional bars kind of coming in here, and then I'm long at the end of Friday based on the reversal that went off at the end of the day. So let's see if I'm a little bit early on this. What I like about this is blue professional bars here at these highs. They weren't at the lows, but the professionals using the strength in the market here at 4,000 to get short. bang, we come back down. But this time around you can see blue professional bars coming in at the lows. So they're picking up the lows at this point. The amateurs get wrong-footed. They get taken out with a Rambo to Rambo channel. We go the other way again, back down here to the lows. More Rambo patterns down here. Another Rambo to Rambo channel where they're getting it wrong. And then into the close on Friday, the blue professional bars are picking it up. I like this for a move, for a U-turn. So blue professional bars on the way down, blue professional bars kind of getting the move going on the way up. But we need to crack through the trailing stop, and you know, the open on Sunday is usually pretty market wings around because it's thinly traded. So we'll wait and see if I'm early on that move. So that's the 13,500 tip bar chart. Not unlike the 1500 tip bar chart, where you can see the highs with the Rambo patterns. Blue professional bars picking it up at the lows here with the kind of extreme exhaustion sell signals at that point, and we got a bullish divergence. Yes, we're starting to put in some supports here. We're overshot our support in the highest time frame here on the 15-minute chart, so we ought to be looking for long trades. We've got a couple of pullback to end of trends on the lowest time frame. This won't be a pullback to end of trend on the intermediate time frame, but at some point the support will come in here. These two lines need to cross and come together. That's why I'm saying it could be a little bit early on this. 45-minute chart, there's the support in the highest time frame here. Whole family of blue professional bars at the lows with exhaustion sell, and there's the Rambo patterns at the highs of 4,300. And the 135-minute chart, this is early. I know we've got exhaustion sell, but there's no bullish divergence yet. We found support, blue professional bars kind of come in here, but this highest time frame has not played out. So these lines have not kind of come down to zero and crossed. So that's why I'm saying it could be early. And then on the daily chart here, that's what we're looking for. We're looking for this support on the daily chart to kind of come and be confirmed. We need to get above 4,000 for that confirmation to come in. I was thinking that maybe the support this week would come in between the low on Friday, so that was the Powell speech day, and the resistance breakout level that we've generated beforehand. Whoops. Let's cancel that. But it didn't. It continued to trade through there. So this isn't going to be a classic kind of pullback to end of trend that's going to signal. That could mean that we need to get through 4,300 and for this to generate, you know, pullback to end of trend a lot higher up. So that would be very kind of counterintuitive. The market at the moment, all the pundits, everybody's very negative about the market at the moment. And just remember that, you know, when we have all that negativity, it's kind of a good signal for reversals, and I like this for exhaustion sell bullish divergence kind of come in. It would be a nice kind of counterintuitive move where the low was made, and we didn't have blue professional bars right at the lows kind of picking it up here, but they forced the market down, and then the next opportunity they came in at that point to kind of pick it up. So let's see. So the Emini, I think, is the most interesting kind of chart kind of going on this week. I was hoping that crude, corn, soybeans and so on would rally last week. We did get a rally kind of Sunday into Monday on crude. Here was the setup that I was looking for. We hadn't seen blue professional bars at the highs here, and so I didn't like this for a short signal. All these blue professional bars did come in at the 86 level here, which was good for the stopping the downtrend and the reversing into these highs. But I think there was some kind of more fundamental news that kind of came out. The professionals kind of came in at 97 up here, and the market has weakened kind of severely from there. No blue professional bars at the lows, but we are coming into the area where we saw blue professional bars last. We're oversold on better sine wave. You can see the background is printed in a red. So let's see around this 86 level whether that holds on crude. Corn, we'd had strong moves in the ags, driven by this kind of move into the highs. No blue professional bars, and so I didn't like these for kind of short trades at these point, and it's held at this kind of 650 level. So let's see if we continue to hold on corn and we get an opportunity to rally up through 680. Soybeans had a nice trade the week before on soybeans with this move here. Again, at the highs, no blue professional bars. We have had severe weakness, but here's where the blue professional bars are coming again at 1390, kind of down here with an exhaustion pattern, and we bounced from there. So let's see if this kind of whole area kind of holds. and we get the ags and crude rallying a little bit. Same thing with wheat. No blue professional bars at the highs. We did get kind of extreme, but blue professional bars at the lows hold. We rally from there. We test back down, a stair-step trade on better pro-am. Blue professional bars step in, bang, we rally from there. Same thing here at 800. Blue professional bars kind of get in. So if we start rallying through here, what is that level? Can't read it. 820. Above 820 on wheat, again, that would show that the uptrend is still in play. So that's what's going on with the ags and crude. Natural gas, again, blue professional bars at the lows here. Yep, they sold it down pretty hard at this point here, but they didn't have blue professional bars taking profits at the highs or here after exhaustion buys. So I didn't like those particularly for kind of a short setup. But this, we're coming into blue professional bars holding at 880, and so let's see if natural gas kind of rallies again this week. Copper. Now copper, I was not convinced of these signals last week, but we've had quite a lot of weakness in copper. We're down at 340, kind of down here. That's exhaustion sell getting the move going, and we've not seen not seen a similar kind of exhaustion pattern to bottom the market in copper. So that's still looking a little bit weak at the moment. Now, gold, silver, and Bitcoin. Silver's actually triggered a signal, which is interesting. So we kind of topped out here above 20, kind of sold off. Didn't like this for a reversal trade here at this point, because that's based on the bullish divergence and exhaustion sell that set the move off at this point. I'm not a big fan of kind of optimizing code so that this signal would only be generated if we got an exhaustion pattern here. It's just looking for the last exhaustion pattern, and I'd do as minimum number of kind of optimizations as absolutely possible in code. I can't think of any particularly, but it's just looking for a pattern with a exhaustion sell bullish divergence, and then to kind of filter out the good and the bad trades I do kind of visually. So this didn't look like a good setup anyway, because this pattern happened at the beginning of the move, but this is more like it. Exhaustion sell, a lot of patterns down here at 17.5. Amazing, we're down at these levels. Blue professional bars do come in, and we've got a stair step setting up at the moment with another exhaustion pattern here, and it's generated a triple signal. So silver looking interesting for a rally there, but gold, we have not had a similar pattern. Yes, blue professional bars coming in at the lows, but no exhaustion sell at this point. We're catching, we're holding at that point, but we haven't tripped a signal on gold. But Bitcoin, we are starting to see that. You can see here this 19.5, 19.6 level is key. All these blue professional bars kind of come in again when we test down to those lows, and we haven't seen any yet. No blue professional bars here, but if we got a stair step, which is where the pro-am line kind of trips back up when we see the first blue professional bar after this kind of sign of strength here, that would be an interesting kind of signal to kind of go long. So that's the precious metals and Bitcoin. We have not found supports yet on the Forex charts, Forex futures. So we've had these kind of signs of weakness here with the euro. We continue to kind of move down. But we've got an exhaustion pattern at the end of Friday, blue professional down bars kind of going on here. We're holding at that point. So let's wait and see. 99.5 on the euro. This level here could be interesting for an area to bounce. British pound is still weak here. We've seen no blue professional bars at the lows, and all we've seen is stair-step trades where blue professional bars kind of come in on the retraces. So the pound is still weak, and Aussie dollar maybe a little bit of support coming in here. We've had exhaustion patterns, blue professional bars at the lows, no bullish divergence yet, and we need to get back above this level here. So we've not signaled anything on the Aussie dollar, and Japanese yen, nothing there yet. And this last move was a stair-step move. At that point, no blue professional bars at the lows. Yep, exhaustion sell, but it's not in the right place. This is kind of getting this move going, if you like. So on the Forex contracts, don't see anything happening quite yet there. And lastly, 10-year notes. Keep on trying to find areas of support. We get these kind of triple signals, but none of them have caught. And there's no blue professional bars at the lows, no exhaustion sell at that point. So nothing on 10 years at the moment. And then, as I said, the E-mini will probably be the area where we'll see the first kind of rally if this area of support down here at 3900 holds, and then the other markets will maybe follow along from there if we have tested into those lows and kind of basically are looking at a counterintuitive play where at this point here, you know, we've tested into the bottom that was made down here at 3700, and if that is enough kind of blue professional bars at that point to hold it and to rally back up. But as I said, I tend to be a little bit early. Let's wait and see Sunday into Monday into Tuesday to find out if that whole area here between 3900 and 4000 is the area that we're going to catch and hold. So we go. Good luck with your trading next week.